Is the stock market a scam? Stock market is either a sophisticated investment tool for building wealth, or the world's most sophisticated casino dressed up in a suit and tie. But is it a scam? Find out in today's thrilling episode of Is It a Scam? Yes. On paper, the stock market is supposed to be about investing in companies you believe in. In reality, it's about extracting money from regular people and transferring it upwards, using every trick in the book. Let's break it down. Number 1, it's rigged for the rich. Buy a few stocks, hoping that they'll grow over decades. Hedge funds use high-frequency trade algorithms to front-run your trades by milliseconds, scalping pennies millions of times a day. So they get insider calls and you get Jim Cramer yelling at a screen. Number 2, it's built on manipulation. Stock prices don't really reflect a company's actual health. They reflect social media hype, strategic leaks, and buybacks to inflate share value instead of raising wages or building better products. When the market dips, corporations spend billions buying their own stock back to prop up prices for shareholders and not workers. And number 3, retail investors are the exit liquidity. Meme stocks, crypto booms, it's fun until you're the last one in. Retail investors often buy the top while institutional players quietly dump their shares. You're not investing, you're just someone else's exit strategy. When Wall Street wins, it's capitalism working. When it loses, they yell emergency and ask for taxpayer bailouts. In 2008, they tanked the economy, got rescued with public money, and still paid themselves bonuses. Regular people lost their homes, jobs, and pensions. And number 5, financial media exists to keep you betting. People shouting buy, sell on your TV, they're not fiduciaries, they're hype men. Most of them are paid, biased, or just plain wrong. Their job isn't to help you win, it's to keep you playing the game. The worst part? Built the entire retirement system, 401ks, IRAs, pensions, on this volatile, barely regulated casino. Future stability depends on how well a bunch of strangers trade on vibes. Recent market crashes having forced people to delay retirement or go back to work. Imagine spending 40 years saving only to have your plans vaporized by a hedge fund algorithm. Updated policies can help, but they're not enough. Changes to Social Security and cost of living adjustments help some. With the market this unstable, even generous policy shifts can't undo decades of insecurity. No politician wants to admit that tying retirement to stock market performance was a terrible, horrible idea. What do you do instead? Diversify, and no, not with more ETFs. Try this: annuities for guaranteed income, real estate for steady rent and appreciation, stable value funds for capital preservation, actual social safety nets. Your ability to retire shouldn't be dependent on some crazy thing Elon Musk tweeted.